Hello and welcome to BQ Prime. A very good morning to all the viewers. Joining us on the show today is Jigar Mistry from Bond Capital to discuss stocks and sectors which are in focus and could be good investment bets from here on. Good morning, Jigar, and welcome to the show.
Good morning, Hiral. Thank you for inviting me as always.
Always a pleasure. Jigar, let's start with the banking names, right? Clearly, over the last couple of trading sessions, there is clear outperformance coming in from banking majors, and the kind of move that we are seeing in terms of bank nifty is way better versus the nifty as well. What's the sense that you pick up in terms of banking? And if you have to divide it between the private banking space as well as the PSU banking space?
Right, Hiral. So I think, see, what's happening is that we have to take a sort of giant step back and look at this sector starting 2015. So anything before 2015 was a different era, in my opinion. After 2015, once the asset quality review was initiated and a lot of, your bad loans came to the forefront, the banking industry itself has got cleaned up a lot. And a large part of the incremental lending has happened in the personal lending space, and because of that, the books are clean to a certain extent. And also, you look at the three or four driving factors behind the banking space, then all the four cycles now look to be in alignment, and there are different ways in which stocks react to all four. So obviously, credit growth has been fairly decent. That's driven by, as I said, PL sort of loans and not really corporate. Secondly, your NIM cycle, because of the rising interest rate, has been fairly decent. And if you look at the current results by most banks, barring a few, so I think Federal Bank sort of disappointed a little bit. But other than that, I think most banks did report a reasonably good increase in your NIMs. The third is the credit cost cycle, and there, it's been benign since the last 3 or 4 quarters for most names. And last is the valuation cycle, where it makes a lot of, basically it makes a lot of difference. So once all the three cycles are broadly in alignment, we realize that, let's say initially the ICICI and SBI sort of outperformed HDFC Bank because everything was okay, and the valuation cycle was to be played. Then a lot of investors played a very similar theme through a lot of PSU banks. And now, the same thing is played via a lot of smaller banks. So if you see, I think South India Bank was reported numbers, and those seem to be fairly decent. RBL and a few of these names essentially are the ones where investors are playing the same cycle. So looks like a fairly reasonable click. I think most cycles mean playing out now means that your valuations are now in alignment, and the incremental focus will move to asset liabilities and individual nuances of different banks. So I think that's where we are at, reasonably positive on the banking space as we go ahead.
Right. So, Jigar, what would your top picks be or recommendations be from the banking space?
The ones that we own in the fund, Hiral, are your sort of usual suspects. So HDFC, ICICI, SBI feature in the top five. Also IDFC Limited. So IDFC Bank within the smaller banks has reported very good set of numbers. We prefer to take that exposure via IDFC Limited, which eventually we think the structure will get collapsed, very similar to what's happening in Equitas and Ujjivan. And I think that name features in our picks. RBL is increasingly something that we are interested in. But a similar story sort of plays out through the microfinance sector as well. So, we can discuss that if that's of interest.
Right. Moving on in terms of the microfinance names as well. Basis the earnings that have come out so far, what's the outlook in terms of loan dispersals? And secondly, in terms of segments as well, where are you seeing traction?
See, I think microfinance is a very interesting sort of a sector, because if you look at, and let's again go back in history, Muhammad Yunus starts the Grameen Bank in 98. Vikramakulla starts SKS Microfinance in 2001, if I'm not mistaken. So this is the founding sort of thesis of microfinance in India and across the Southeast Asian region. Uh, they have had a fairly decent run for the next decade. So 2001 to 2010, the sector grows very, very strongly. And then there was the Andhra Pradesh crisis in 2011. And SKS had to write off almost two times the combined profits of the last decade. So I think this introduces an element of cyclicality in the microfinance space that's unbeknownst to a lot of the otherwise banking channel names, and therefore that is always an extra sort of leg of standard deviations and volatility that gets introduced to this name. But that equally means that when the going is good, things turn out fairly well for the incumbent players. Now, if you see over the past 3 years, coming much more closer to the current time frame, over the past 2 or 3 years, there have been several events which you can classify as one-off, but happening in regular occasions, an oxymoron of sorts. But think of it, as the sort of Amphan came through. Then there was this Assam situation where the state government wrote off some of the loans. Then there was flooding in West Bengal. So I think all of this combined resulted in elevated levels of NPS, which now seems to be settling down for most players. Within that space, I think there are broadly two or three ways in which one could play that. So clearly, the first one is the banks and the small finance banks. They have a fairly decent exposure there. Bandhan Bank, I think, stands out there. That's where we have some exposure. Uh, the second is the NBFCs part, where you see a lot of them doing fairly decent numbers. So Credit Access Grameen or Suryodaya, or the one that we have is a Satin Credit Care, where your most of these banks have reported very benign credit costs, and you basically see ROAs in excess of 3%, ROEs approaching 15-17%, and for some of them the price to book is lesser than sort of one time. So makes up for very interesting cyclical plays if that's what somebody is looking out for.
Right, so that's with regards to where the microfinance segment as a whole is concerned. Moving on, if you see the pharma space, a lot of volatility is what we are seeing there. Clearly, the US generic pricing movement is an anticipation of that. What do you make of it, and who do you think will be the beneficiaries and the laggards?
Yeah, Hira, I think very, very interesting space because, if you sort of track it back in time, what's really happening is obviously, see, there was this big act in the US in 1984, after which it really paved the way for generic companies to start, supplying generic drugs in the US once the patent expiry happened. So, what started with Ranbaxy filing a generic for the largest drug, which was Lipitor, a lot of companies sort of came around, and we had almost 15 years of super normal profits and growth. But then three or four things happened which sort of almost killed the story to a very large extent. So your FDA started putting up sort of fees under GDUFA, and they started approving a lot of generics. And the first to file status again was approved for three or four players instead of one. So when one player comes, your prices drops by say 30-40%. But if four or five players file simultaneously and launch it, then the prices go down by 80-90% on day one, which is what has been happening. So that was the first part. Secondly, FDA started checking facilities a lot often, and sort of Indian companies were found wanting to say the least. The third part was that there was a lot of consolidation that happened across the wholesalers, retailers, and the pharma beneficiary management. So the PBMs, and there was a cross-sectional sort of mergers and acquisitions that went through, and all of these factors led to a drop in generic prices for multiple years now. Uh, Add to that the fact that the incremental sort of demand was in the complex generic space and not just single molecule, that limited the area of operations for a lot of these players. Uh, that has transpired. A lot of companies have fallen. Lupin, I think, is down 60-70% from tops. Teva, the Israeli company, is down 90% since listing. But I think increasingly, three or four things are changing at the margin, which makes the sector very interesting. First, US is staring at shortages which are very widespread. Secondly, with COVID, there was like a tailwind of demand which converted into a sort of a headwind with inventory stocking coming at peak. And lastly, that's again turning around. And whatever consolidation in the sort of buyer space had to happen has happened, I think. So increasingly, the rate of price falls has been corrected and arrested to a certain extent. And going forward, we think things could improve materially from here. The companies that have the largest exposure in this space are the likes of, say, Aurobindo Pharma, Zydus Life Sciences, Alembic, Dr. Reddy. So there's specific issues with each of them and differing proportions of the US generics versus the India mix. But I think generally, if things sort of stable down and starts looking up, then these are the companies sort of one can focus on.
Right, so that's with regards to where pharma majors go. And very lastly, of a Zensar Technologies, which reported numbers, Jigar. Clearly a good set coming in there. What's your view and what would you advise an investor to do?
Right, that's sort of something that we own, Hiral. But see, the tech business is an interesting one because what India has, I think we discussed that last time as well, that what India has is, IT services that's very different from tech in a way where, it's a service business. So say, for example, something like a Zoom can report 100% growth in revenues any given year. But say TCS will have difficulty outperforming their 16% growth guidance by say 2 or 300 basis points because you need to have employed a lot more people at the start of year in order to do that. And therefore, the large, big sort of bracket IT companies are something that are not really interesting even after a reasonable bit of correction. But in spaces, you see that a lot of these companies which operate on niches continue to do very well. Within that space, you saw Mastech report a reasonably good set of numbers. Now, they had their own set of challenges in the past which are now reversing. But from point to point basis, they do offer a reasonably good sort of return targets. Scient is something that is interesting as well. So again, Zensar, First Source, they're these specific plays which are operating in niche areas, and therefore the broad-based, demand destruction or the lower demand growth that you are seeing across a lot of these players is not being translated with these names. So I think we're continuing to own that name.
Right, so that's with regards to Zensar Technology. So overall, a lot of names that we've discussed in today's Day of Trade. Thank you, Jigar, for joining us on the show and giving us those views. But clearly, it's the auto pack which is in focus as well ahead of the SIAM numbers that have already, in fact, now come in. So overall, if you see in terms of the numbers as well, good numbers. Aisha Motors on the back of earnings is seeing a move of almost around 5 to 6% in trade. Apart from that, if you see in terms of the total auto sales, a 16% rise is what we've seen in terms of the April wholesale numbers. Passenger vehicles is clearly, as well as the two-wheelers, have seen good growth. Scooter sales have seen a growth of around 19 to 20%. Motorcycles up 14%. SUVs around 16%. So overall, good numbers coming in there. Apart from that, Bajaj Auto, HUL, M&M, as well as the Britannia, which are seeing good up move today. Pressure coming in terms of BPCL, Power Grid, NTP. So it's the power and the metal pack that is trading absolutely weak in today's session of trade. Zensar Technologies, South Indian Bank, which is seeing gains of 9.5%, and this is again on the back of earnings. Glenmark is seeing some smart gains. RVNL is under pressure for a second consecutive session. Markson's Pharma under pressure. KC International on the back of earnings under pressure. So overall, a lot of stock-specific action is what we are seeing. But from a market-specific perspective, pretty much a flattish move in terms of the Sensex, as well as if you see in terms of Nifty 50 as well. We're still below the 18,300 mark in today's Day of Trade, and a mild positivity is what we're seeing in terms of the Bank Nifty, which is seeing gains of around 60 odd points. That's all that we have in this session. Thanks for watching, and look out for the other shows during the day as well.